You're actually calling this the great banking transition. Tell us about the key factors that have driven this change and how long do you expect them to last?
Indeed, it's been a really eventful last 12 months in global banking. As you said, this has been the first time banks in 15 years have gained a double-digit return on equity. But on the flip side, we're also seeing a period of enormous volatility. What we're seeing is that the last 12 months was also notable for the rescue of two well-known banks in the US and Western Europe. And all of this is partly because of the rising rates and also the great divergence and the great transition, wherein about 70% of net fund inflows into the financial system are now happening off bank balance sheets. What's also happening is a large part of the bank's earnings are coming from non-balance sheet activities in terms of transaction banking and distribution. All of this is putting pressures on the net interest margins, which, while healthy compared to the last few years, the outlook remains modest. One of the reasons why the price to book of the banks, even after good earnings, remains at around 0.9 compared to 2.8 for the rest of the economy. So this is actually leading to fairly big divergence across markets.
Do you expect those mid-sized banks to be out of the woods after the turmoil that we saw earlier this year?
I think one of the things that's going to completely change banking is the rise of technology and AI. Banking, as you know, has always been a technology-driven business. I think pre-2000s, it was all about automation. In the 2000s, all banks were going online. The last 10 years was about going mobile. But the last few years and the next many years are going to be about AI. And AI might help banks completely reimagine experience, but also reimagine economics. And banks, big or small, that are able to actually leverage this will actually be able to tide through and actually thrive in the years to come. So the question is more about mastery of technology in addition to how actually banks chart out their course over the next few years.
And Renny, how do you see the regulatory environment changing to keep pace with AI?
I think if you look at the use of AI, I think there are two sets of things that actually happen here. One is things that actually help you reimagine customer experience. If you think about how consumers interact with banks, I mean, they do that through apps in a particular way. I think the way technology is evolving, the use of conversational technology, the use of actually, much simpler engagement with consumers will dramatically simplify experience, and that side of the use of AI may actually be, quite prevalent. The other use of AI is in making decisions about whom to lend to, how much to lend to. Banks have been using a fair amount of AI on this already. The third part of use of AI is actually in back offices in terms of automation. Banks, as we know, are large service businesses employing lots of people, but also people who need a lot of training. The use of AI as co-agents to actually employees serve consumers better is going to be pretty effective. So there's a whole range of application of AI which actually enables, supports employees, and actually simplifies the access to banks for consumers in a way that actually will be quite welcome.
Of course, it is quite expensive to borrow at the moment. What's demand like for borrowing?
I think if you look at the indicators of the economy and look at the way the financial system is moving, one of the things to keep in mind is that because of this great transition, literally 70% of the net fund flows are happening on balance sheets which are outside of the banking system, and which actually means that banks are increasingly focusing on earnings from transactions, from distribution. So in many parts of the world, you would see that the demand is something the banks are able to meet. The bigger question is how banks are able to make the transition away from capital-intensive, balance sheet-heavy businesses to businesses that rely much more on transactions and distribution. And that's a transition which banks in some part of the world have made and others are still in the process of.